Houston, we have an inventory problem. Stay tuned to this month's Market Watch. Promise you, it'll be worth it. Good day, Toronto. Welcome to this month's Market Watch. Houston, we have an inventory issue again. Here are the numbers that you guys probably have been talking about and seeing. We have 22% sales up from last year to about 7,800. And again, this all sounds rosy and great, but we're still below the 10-year norm. The peak of September for the last 10 years was about 2016, where we saw about 9,800 sales. That means we're still right now where we are, less than 25% from the peak. So we're all good, nothing to worry about, okay? The only issue that we should worry about is not the amount of sales, but really the amount of listings we're getting. We're actually down 2% listings to about 15,000 from last year, which ultimately leads us to a tighter market. So we are very, very slowly seeing the demand outpace the supply. Now, if you've been following my market watches for the last little few months, you'll know what I've been talking about is the month of inventory. This month of inventory right now is at 2. This means that if there's no new inventory that comes out in 2 months, it will all be absorbed and we'll have no more houses, no more condos for sale. But here's the kicker why we're different at 2 this month. It's because the last few months I've been rounding down from 2. So for all the math nerds out there, that means that it's been 2 point something, something, something. For the first time in 2019, it's 1.995 something, something, something. That means I'm now rounding up to get to the 2 months of inventory. That means we are slowly outpacing the supply for the amount of demand we have. This results in a very nice solid 5.8% increase, which is unsustainable, but that's a huge jump from last year to about $843,000. Now, the weird thing I did notice anecdotally was when September kind of started, that's usually the start of the fall market, kind of went boom right into Labor Day and then kind of slowed down. And it went boom again. It was on and off and on and off again. So what I did was I dug into the numbers to kind of see the transition from August to September in 2019 and in 2018. But surely it did back up my inkling. So what I saw was that from August to September in 2019 is that we saw a minor increase in sales, about 1.46%. Now, you may be thinking, that sounds kind of weird because September is supposed to go boom, rocket ship, fall market, goes for a quick 2 months, and then we slow down for the holidays. But the interesting thing is it didn't this year. So I looked back into 2018 and we saw the same thing. The only difference between 2018 from August to September and 2019 August to September is that we got a lot less listings this year than we did. So this is what I can ultimately see what's going to be happening in the next 2 months in the market. It can go either way. One is that the buyer pool is still out there and then they are still looking to buy something and we do get the equal amount of listings coming out and they'll still be balanced with a minor increase. Or two, a lot of the listings that people have been waiting to sell, meaning that they've already listed, haven't been sold yet. And the buyer pool who has not made a move just yet is going to make a move in October with less listings. That's going to ramp up the price. Honestly, if you ask me, I think it's going to be more the latter, and it's going to force about maybe a 1 to 2% increase in price of month over month, and we'll probably see maybe a 5 to 6% increase in the amount of sales that we have from last year in October. That's kind of what my pulse on the market is going to be. Now, on the pre-construction side, we're seeing a lot more demand than I'm used to. We had some few major projects that were selling out in a weekend, just like boom, 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 boom. So even though they're selling so quickly, there has been an increase in price. We're kind of like the buyers are accepting what the new norm prices are, and they're still going boom, 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 weekend sellouts. So this is kind of what I'm noticing, okay, in terms of pricing. We're about $1,000 per foot anywhere in the GTA that's near like a GO station or like a subway station. And then if you're not near a GO station or subway station, you're looking at around like $850 a foot. Now, if you go into downtown area, which is south of Bloor between like Jarvis and Bathurst, we're looking at $1,350 to start at a bare minimum. If you want to check it out, I have a link in the description below in terms of how I work up the numbers backwards to get that. So it's kind of going to be the new norm, whether you accept it or not. And don't forget, 11 Yorkville went as high as $1,700 a foot last month. So expect prices to stay that way, if not even increase further, just because the development charges from 2019 are going to continue going up. And then as demand keeps going up, the prices will keep going up. So definitely, if you're trying to make a move, make sure you contact me so you know what the correct move is for you, because the market is constantly changing all the time. I'll put my contacts right here. Until next time, happy real estating. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.